All right. Good morning, everybody. Happy Tuesday. This is the morning show. Welcome to Stock Market TV. Got the whole crew. Me, Spencer, JC, Steve, Alfonso. Everyone's with you this morning. A lot going on. We've got charts. We've got some earnings. A lot of earnings. No like huge earnings today, but just like a large number of a large quantity. And then the big ones are going to start tonight, right? With Microsoft and AMD, and then tomorrow we'll get some more. So earnings. We got charts. Our guest today is going to be Ari Wald. It is time for Ari's monthly appearance on this show. So very excited for that. We'll, of course, have Kenny Glick on the show. We'll have Patrick Donawilla on the show. So a lot going on today. Do us a favor. Hit the like. Show us you love us on YouTube. We appreciate that. Let's bring the guys on. Here we go.
Oh, good morning. Good morning. Happy Tuesday. You guys want to hear some good news? Right off the bat. Ready? Boom, 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 boom. You ready?
Yeah.
New monthly candlesticks tomorrow. Hey now.
Oh, I forgot.
Happens fast.
Dude, new monthly candlesticks, man. I'm very excited. I've already peaked. I was looking at some international markets today, and I want to get into it a little bit. You know, Canada making new all-time highs, London making new all-time highs. What does the United Kingdom and Canada have in common? Anyone? Not all at once now.
A lot of
Canada's not at new all-time highs, so I don't know.
Financials, JC?
Lack of growth, lack of technology. More natural resources, more industrials, more financials. Not like America is.
Hey, have you peaked at the monthly candle in the banks?
I did see the NASDAQ Bank Index, which in and of itself is quite the oxymoron, considering the NASDAQ, by definition, excludes all financials. So when I see the NASDAQ Bank Index, it does make me chuckle a little. I'm not going to lie. No? So I was looking at the NASDAQ Bank Index this morning. That's what I do, you see. These are the things that I do.
They're allowed to have lots of indexes.
Dude, there's so many indexes, man. In fact, like I've discovered new indexes because I take all of the indexes, most of which I didn't know existed, and I go one by one in alphabetical order, and I discover new indexes that way. You see, new indexes that I had never heard of. Right. The beauty of this, I've been doing this for how many years have I been doing this now? I've been doing this. My first day on Wall Street, as a matter of fact, was July the 12th of 2004.
Wow.
But I got going like in 02, 03. I was interning in Merrill Lynch and stuff like that. So I've been at this for over 20 years. But fun fact. So I think I'm on year 22, 23. I lost count. It don't matter anymore. But the point is that as long as I've been doing this, I still learn something new every day. I learn about a new company that I had never heard of. I learn about a new index I had never heard of, right? Does that happen to you all the time, Strazza?
Yeah. You started quick after college. Started in July? Damn.
It was love at first sight.
And you were working in Midtown, or your very first job was downtown at the Merrill office?
No. My first job, it was in Stamford, Connecticut, as a matter of fact.
Oh, that's right.
Right off 95. So whenever I'm stuck in traffic on 95 in Stamford, which is every time I'm on 95 by Stamford, I look over. You know that, is it a Hilton? Yeah, it's a Hilton, right? So you got the UBS building. They used to have like the largest trading floor ever. Now there's 4 people there, and right?
It was RBS.
It was a UBS.
The RBS had the largest trading floor. They were right next to each other.
It wasn't a UBS.
It was RBS. They were right next to each other.
I'll defer to you. You would know better, Mr. Connecticut. I'm still going to go with UBS. But nevertheless, on the other side, right? And it's crazy. Like, you know how like people talk about like, oh, on the other side of the tracks? Yeah. You know, like, oh, don't go to the other side of the tracks. Stanford is exactly that. You got the tracks, and then you got all these bars and restaurants and like Wall Street firms. And then you have the tracks, and then you got the hood.
It got a lot better over the years. I lived there at one point in South Stanford. It got nicer. They developed it. It got gentrified like crazy.
I didn't know what that means because I grew up in Miami and we don't have trains down there, or at least we didn't where I grew up. So I didn't really understand what that meant was the other side of the tracks. And then I learned real quick in Stanford. Can we talk about the market, please? Spencer's like laughing because he doesn't, he's from New Jersey. So Connecticut's just way too far to go.
No, I'm laughing that you didn't know what other side of the tracks meant.
I didn't grow up in, in an area that had train tracks.
Well, for you, it'd be the other side of the canal.
Yes, indeed. But we didn't have that kind of hood separation where I grew up.
All right.
It was more blended in.
Cool.
All right, ladies and gentlemen, the Dow futures this morning are doing absolutely nothing. They are flat, 0.00. Mr. Blutarski, 40,770, pushing 41,000 for the Dow futures. Wow. S&P 500 futures up 0.25%, above 5,500. NASDAQ 100 futures up 1/3%, still under 20,000, 19,260. 30-year bond futures are flat this morning, just under 120. You got crude oil futures down almost 1%, back under 76. Crude oil taking in the chin. Copper down again 1%, slightly above 4, trying to hang on to that 4 for dear life. Gold up again, 1/3%, 24.30. Silver up again, back above 28, up 0.5%. Volatility index still hanging in there at 16.5. For the VIX, which is more than I would have expected. Over in the funny money land, you got Bitcoin flat this morning, 66,600. Ethereum up almost 1% this morning. That's 33.50. Solana 180 hanging in there, down a stick. Binance struggling to get back above 600 now at 573, flat on the day. Total crypto market cap, Spencer Israel, 2.34 trillion. With the Bitcoin dominance right at 56%. What stands out from the futures this morning?
In the futures, not a whole lot. It's
not a whole lot.
Really quiet.
The copper stands out to me, Strazza. Does it not stand out to you?
I've been watching copper. I got long a couple copper stocks, and I'm looking for a little bounce here, and it's not coming.
Dude, copper's gotten the crap kicked out of it over the last couple of months, man. Look at that. Like, seriously, though. Like, down like almost every single day since the end of May. Right? For the last 2 months, just straight down from 5 to 4. Like, literally.
So crude oil and energy futures, really, as the whole bunch of them have been trending terribly. Also, what do you make of that? Commodities.
What I make of it is, how are these energy stocks hanging in there so well despite the selling in crude oil?
It's interesting. Yeah.
Like, you see Valero? Right? Hanging in there real nice. So that's what stands out to me of the crude oil. Just how strong. Look at ExxonMobil. How strong the energy stocks have been despite the weakness in crude oil. That stands out to me.
Worth noting, ExxonMobil, Chevron, earnings this Friday.
Yep.
So
Exxon's right there. And the strongest ones are breaking out, even with crude oil, like we're saying, trending lower like this. So
can we talk about the Novogratz interview on Bankless?
Yeah, what'd you think?
It was fine. I like to hear from Novogratz. He's got a lot of intel that I don't have. I like those Bankless guys.
Yeah.
I've been listening to him for a long time, so like that's a kind of podcast that's up my alley. I'm a little disappointed. I feel like I didn't learn anything new. I didn't really get any new perspectives. I didn't really get that much new intel. So I thought that, I'm not going to complain about a Novogratz Bankless interview. I'm going to watch it.
Yeah.
But I feel like it was maybe underwhelming, and that's nobody's fault. Maybe there was just not much to talk about. How do you feel? Or am I misinterpreting it?
We've heard most of these things before, right? He's a huge bull, high degree of conviction. That's what I like about him, right? Like he's kind of been in this position. He's been super long Bitcoin. He started a new firm that's completely focused on digital assets. So he's been all in for as long as anybody.
It's also easy. It's also easier when you're playing with house money. He bought Ethereum at 1, right? Sold a bunch and bought a jet. So
he was also holding.
You like in the breakout multiplier, you take half off the table on the double and let the rest ride. Like he did that a while ago, and it was more than a double.
He was also holding stuff like Luna until zero, though.
He was also holding stuff like Luna. He even got a Luna tattoo.
Which is awesome.
So he's gonna be he's gonna be thinking about that one for a long time. But I think he survived. I think he was fine. Anything else from that interview? Am I just did I just wasn't paying attention? Was there anything else good?
He was pumping. But that's what he does. Listen, he's a bull. He's been really right for a long time now. And I think he'll continue to be right. Here's Galaxy Digital. This is BRPHF. I just dropped it in the chat. Looks like a lot of other crypto stocks. Looks a lot better than a lot of crypto stocks, at least the Bitcoin miners. So I think this is a good vehicle.
So this is basically like the Berkshire Hathaway of crypto.
Trying to be.
That's a good way of putting it.
He just owns like a bunch of different crypto projects and just like invests in crypto stuff, right? And it's in Canada, eh?
From market making to they're advising and making consulting fees on crypto.
They're mining, right? They bought the mining operation.
They're advising portfolios. Yeah,
they got but it's in Canada, this thing.
Yep.
And why? Because regulations are softer up there.
That's a great question. But you got pink sheets here, BRPHF.
So we don't know why he's in why he's in Canada.
Well, I don't know that. I can offer a theory as to why they're not traded on the U.S. exchange, and that's just they don't give a shit, right? They don't care.
Yeah, because it doesn't matter, right?
Yeah.
Yeah. All right.
A lot of the miners are from Canada too, aren't they?
That's probably true.
I don't know.
Yeah.
I don't know if some of them are. I don't know if a lot of them are.
How many?
Anyway, Mike Novogratz on the Bankless podcast. That was good. Balaji's been making the rounds. I don't know if you've seen that. He's making the rounds, more political than crypto, unfortunately. But he's, if you're interested in why, all these tech executives are flipping Republican, he has a pretty decent explanation of those things. But that's kind of boring for me.
You see the PayPal report?
Do you think I saw the PayPal report?
Spencer?
Mm-hmm. Yeah. That was like the first comment in the chat this morning. I think it was PayPal. So what are we up now? We're up 8%, but we're off the highs, right? Do I have that correct? Make sure I'm. Oh no, we're kind of right there. Anyway,
this was a $300 billion company.
Is it really?
Yeah, just a few years ago. There's got to be something here. This is something that I think a lot of us use pretty often. They've been around forever. They did have a moat at one point. I think, this is like the crypto story with these guys, but the base is shaping up. And it's been a while since the markets, rewarded them for good earnings reports. So this is interesting.
Yeah, there was a beat and a raise. I mean, they own Venmo, which I use still on a regular basis.
PayPal owns Venmo? I didn't know that.
Yeah.
Dude. And JC, don't you use PayPal? I use PayPal still.
I don't use PayPal for anything. What do you use PayPal for?
Like it's like linked to my bank account. So like even when I buy crypto on Coinbase, it's like linked to my PayPal. So it comes out of the PayPal. I don't know.
Boomer alert.
Yeah, that's great. Just like click a button on your phone. It's like Apple Pay.
No, I don't use any PayPal. Danny yelled at me so many times for using PayPal.
You used to though, right?
We used to because I was dumb and didn't know anything.
Yeah. All right.
Yeah. I used to get paid via PayPal way back in the day.
Yeah.
Anyway,
and Square looks like you got a little, probably not top there in the context of a nice little rounding bottom that's shaping up. I think these stocks are getting ready. I think they're setting up nicely.
The blockchain fixes this and puts them all out of business.
I don't know if you're right. Like I don't know the details of it, but
I definitely don't know if I'm right. That's just my. It's kind of just my guess.
That's what the charts look like. I think that's what the market's thinking. If you look at these charts.
I have a chart. Can we throw up slide 2, please, Mr. Spencer Israel? This is the one right here, guys. This is the one. What are we thinking about this? New multi-year highs. 54% return for small cap consumer discretionaries. This bull market.
So
how many sectors? How many small cap sectors are outperforming consumer discretionary? You think? Guess. Quick.
One.
Don't look.
I don't know. Not many.
Two.
Which two?
Industrials and financials.
Nope. Industrials, yes. Industrials are the best performing sector in small
And then
caps.
tech. So it's tech. Yeah.
No, materials are next. There are this bull market since the summer, since June 16th of 2022. Industrials are up 70%. Small cap industrials. Small cap discretionary is up 54.5%. Materials up 46%. Russell 2000 up 39%. Small cap tech up 31%. Small cap financials only up 25%. You forget, Mr. Strazza, that they just got going.
Yep.
Consumer discretionary industrials been going. Right?
Yeah.
So consumer discretionary, small caps making new multi-year highs, highest levels this bull market. Would you have guessed that, Spencer Israel?
No, because if you look at the large cap version of this, there's like so much shit in there. I mean, I don't mean shit. I mean stocks that are just not doing well, right? Like Nike, right? Starbucks.
Yeah.
And McDonald's. Yeah. Right. So Home Depot. So,
but none of those are small caps.
No, I know, but that's why, because I like my impression of discretionary is that outside of Amazon and Tesla, it's been rough sledding this year. But you're saying that's really not the case the further down you go.
Yep. The largest component of the small cap discretionary index is a one Abercrombie and Fitch.
That's
all
awesome.
about them apples. Representing 5% of the index.
Yeah.
And of the rest, I don't think you'd recognize any of them. Advanced Auto Parts, Boot Barn. Have you ever heard of Boot Barn?
Yeah.
Boot Barn's a weird one. Like I've never seen
Signet Jewelers. You know that one? I know that one.
Yeah.
Yeah.
Asbury Automotive Group. Never heard of them. Installed Building Products. Meritage Homes. I know that one. Those are the largest components. Let's quickly look international before we bring in Kenny. I brought 4 charts with me. First one is Canada, eh? Throw that one up there. On pace for a new all-time high.
Yeah.
Canada, not a lot of tech in Canada.
All right, what else?
Wait. What's the weighting of financials in Canada? Go.
20%.
Not even close. Spencer?
15.
I don't know, 25?
35% financials in Canada.
I was closer.
35% financials, 0% healthcare, right? Because what do they give healthcare for free up there?
Well, here's the problem.
It's nationalized.
Most of that financial exposure is the Canadian banks, and none of them really look good right now. So,
Royal Bank of Canada, Toronto Dominion, Bank of Montreal, all top 10 there. All right, next chart. Does this look like the end of an unsustainable bull market that just can't keep going up? Or does it look like a new one?
No.
After not doing anything for 6 years and just now starting to get going. Which of those do you think it is?
No, it looks good, but I have a problem with these.
What?
Because they all look very different in US dollar terms.
Is there a US dollar based FTSE 350 index that I'm unaware about?
Are you planning to buy these stocks with anything besides US dollars?
I am going index by index and seeing if they're going up or down.
I'm just thinking about my money. Sorry.
Do you have your mind on your money and your money on your mind?
You know, I'm right. I mean, look, they look great, but when I'm following along with the EWU and the EWC.
Did you see Snoop Dogg with the doing the play-by-play? What was it? The badminton?
Yeah, he's a national treasure. He must be protected at all costs.
Dude, come on. Snoop doing the play-by-play. Oh, get him. Oh.
There's some athletes doing some amazing things out here, but Snoop Dogg is the one who's really winning the Olympics so far.
Dude, what is Snoop doing in Paris at the Olympics? Like, what does he have to do with the Olympics? Like, I understand, like, in 4 years when it's in LA, like, Snoop plays a role there because he's from the LBC. But Paris? Snoop? Whatever. I like it. I'm in.
Yeah,
that was so funny, dude. That made my night. Next chart, Spencer.
I thought we were not talking about commodities, or we were not enthused about commodities.
I don't know what you're talking about commodities. I'm talking about Australia.
yeah.
Oh, this is a country. It's next to New Zealand,
What's
right?
the
So
difference?
France is from there.
Oil. You're right, Spencer.
So I don't know what commodity you're talking about. I'm talking about Australian equities.
What's the difference between Australia and commodities?
This is what we call a commodities country.
What's the difference between commodities and Australia? Commodities are natural resources. Australia is a country
with natural resources within it.
Yeah, maybe, but you can combine the materials, energy, industrials, all that. It still don't add up to the amount of financials exposure that Australia has. This 37% financials, 10% healthcare.
I think they have like 3 banks in that whole country.
Healthcare is twice the exposure of energy. So be careful with that.
I feel like this is taking a really long time.
What is? Australia?
To go through these 4 countries charts.
Dude, what is your beef?
Oh shit!
Like,
come on, wait.
I want to talk about Buffett.
Last one. Ready? Last one.
Okay.
Indian small caps, new all-time highs. Nobody cares.
Look at this thing.
Woo. Come on.
Wow. Listen, this can't last. I'm sorry. I've been saying it for a while now, but I wouldn't touch this with a 10-foot pole. The outperformance here has been absurd from this one country. You look at anything else in EM, anything else in Asia. I mean, Japan's been good lately. None of the emerging Asian countries look like this.
Oh,
I don't. It's gotta. I don't know.
I don't know what your
this is really long.
Your beef is with India. See what I did there? Beef with India.
Well,
throw up last slide. Throw up new slide 2, Spencer.
China.
Wait. Come on. No more.
Last one. I promise. Last
no
one.
More.
Last one.
Killing me.
I promise. Ready? Is that unsustainable, Mr. Strazza?
It's not for me. I don't need to buy a drug manufacturer.
Hold on, stop. Tell me why this isn't for you. Tell me why this is beneath your line and you're too good.
No,
you're too good for Dr. Reddy's labs that are making new all-time highs.
You know I'm not. We've covered this stock over the years.
What's your problem with Dr. Reddy's labs? I don't understand.
I don't want to be buying. I'm not adding exposure to Indian equities right here.
No, nobody's asking you to do anything. I'm just asking. Nobody cares about you and your money. I'm telling you what your problem is with this chart.
No, it's a great chart. Go for it. Go crazy. But I think the dynamic between India and the emerging market flows that they've been enjoying for several years now, 5 years now, that comes to an end soon.
Maybe some of these markets are emerging a little quicker than others. Ever think of that?
China just has to not be terrible, and flows are going to come back towards them.
I don't know what Dr. Reddy's Labs has anything to do with China.
It has a ton to do with China because the money came out of China and has been pouring into India for 5 years.
This is a $13 billion company. You think it's that big that it has all this exposure to money flows in China? I think you're overthinking it, bro.
What are you talking about? That's how it works. Yes.
Yeah, I don't think it does.
Can I bring Kenny on now, please?
Please.
Dr.
Thank you.
Labs.
It's been a long time coming. They ain't come from my club, they tug it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Ooh. What's up, Kenny? Oh, you got to unmute yourself, Boomer. Come on.
You know what it is? I'm always yapping off the air. That's why I don't want to talk over you guys. What's shaking?
Oh, Dow's not doing much, but there's some things moving.
Yeah, robots, baby. Robots. How about that serve?
Tell me about these robotics, please.
That serve trade turned out to be something, a lot more amazing than I ever thought. But again, it's funny when you go on the message boards, there's always a imaginary battle going on with the shorts. Oh, we're killing the shorts. Oh, we're going to squeeze them. Any stock that goes up now immediately becomes a meme stock or some battle with the imaginary market makers that have been getting you for all your life. And now is your chance for revenge. It's just a blue sky breakout, people. $5 stocks that go over 5, get you 750, 750 get you 10, 10 get you 1250.
I love when you say that. Blue sky breakout. I love that. I'm going to start
using
using
as long as it keeps breaking out, again, you just got to raise your stops. I mean, I'm not in the thing anymore. Once it broke above 1250, I was excited. Next thing you know, it's breaking 15, and now I'm just trading it. I was looking for a short the other day, so forget that. But I got a little guy. RR is another robotic. I don't know anything about it. Don't bite my head off. It's probably worth $4, like the whole company. But RR was on the message boards linked to the serve, so that's where I go. But more importantly, I'm looking at drug stocks that kill people and fraud. SAVA. This stock is absolutely
a good thing to look for.
Dream.
Good thing to look for.
Absolutely. Every time they just
ticker?
So fraud, it crashes, it bounces 50%. Fraud, their drugs killing people, it bounces 50%. Fraud, it bounces 50%. And now this time it's made the entire move back from the original fraud allegations. So I don't know what the story is with Sava, but this is one of the most fun stocks to trade. And it just makes no sense. But I can't imagine if their drug stopped killing people and there was no fraud. Where would the stock be? Probably at zero. So I don't know what to tell you. But I know you guys were mentioning PayPal. That stock has been such a dog for so long that, maybe it holds this gap and has a 3M moment. 3M was awful for so long, and then it had a monster number. I'm going to assume this thing rolls over. So right here, this is what I'm really interested in because it usually just gives up the gap. So if it breaks that 63, I'm looking to short it. I shorted it once already on this little tiny roll. I'm looking to see if it gives back a little bit more to 62.50. So that's on the radar. A lot of stuff going on, but these robotic stocks, that's the thing. AI was monstrous. Anything AI, and there's always the top tier AI. Then you go and then you eventually get down to the ninth circle of hell, the scraping the bottom of the barrel. But those stocks wake up also. So if robotics is hot, I just look for robotic stocks that are about to explode.
What about that line that we talked about, that new issue that REIT absolutely ripped yesterday?
Yeah. Again, this is just going back old school. There's just buying. Just like the Viking, it's very shocking to see an IPO that there's no selling. Usually they gap them up and you just get a Coinbase or a Rivian and they just disintegrate, and a lot of times they never come back. But when a stock just gets bought right out of the gate, again, 82.50 gets you 85, 85 gets you 87.50. You get through 87.50, chances are you're going to look at this at 90. But the other one is just sitting around. OS is interesting too, because you're just still hovering right below all-time high. So I'm looking for this to break 28.50 and get into the 30s. There's a lot of good trades going on right now. There really are.
What was the other IPO yesterday? OS?
Yeah, OS. And you also have TEM, which is still hanging in there. Again, it's a very volatile stock, but the IPO, this was the one that I was trying to think of yesterday. It sold off first and has made a nice comeback. That's even more bullish.
I love that. Yes, agreed. Yes,
yeah,
it's a $7 billion healthcare company, TEM, Tempest AI. This is one of those things where they just add AI at the end of it, right? Yeah, like how they use add.com, right?
They'll probably just name it robotics next week. It'll be AI robotics, yeah.
Like adding blockchain, right? Just add whatever's hot, whether it's .com or blockchain or
absolutely. Yeah, they know how to casino.
They know the game. They know the game. I get it. I'm into it. I respect it, honestly.
But it's a tough that PayPal's been a tough stock to own. I thought this was to be a no-brainer when the market started coming back, and it just was a dud so many different times. So just that's the trend of the stock. It just disappoints. So I'm going to wait to see if it disappoints again today. Chances are it will. But if it doesn't, again, 3M, I was waiting for that to roll over and turned out to have the biggest day in the history of its stock. So, I play the game according to what I see. So if this thing rolls over, I'm a shorter. But
was that move last Friday?
I heard you mention it. SoFi, Affirm, UPST, they'll all be in play also. And our pal Rambus, once again, gapping down on earnings. Nobody cares. The stock just drifts down in the aftermarket. You got a little buying today. I'm not buying more here. I got to see if it tests that 49 again from yesterday. And if it holds, maybe I'll add to my position. I've been in this piece of garbage for so long. I mean, I'm up on it, but what a waste of a year, especially with the way semiconductors went.
Kenny, have you seen the QXO?
Yes, I was going to get to that one. Yeah, disaster du jour. So
yeah,
as long as their drugs killing people and there's fraud.
no, this is neither of those things.
No,
this is software. It's software.
No, it's not that.
This was a drug stock that went wrong.
QXO is like a holding company.
Oh,
that
man.
just issued a shit ton of public shares, or there is a private placement.
The stock's down 80% pre-market.
This one has like a whole story behind it. I know the chat knows it, but this is basically a kind of like a SPAC. It's not a SPAC, but it's like a SPAC. And there was like no shares available in the public float, which is why. But they have cash. They have cash on hand. They're trying to buy companies and stuff. It's run by Brad Jacobs from XPO Logistics. Anyway, there was like no shares available for the public trade, and now there are a lot more shares, which is why it's down 80% today. But
I gotcha. Hey, listen, I love this. I love it. Right here, I can see where I'm going to look to buy it. You got this little spot where it just broke down from, and that's now the VWAP. So 1135, that's a no brainer. Again, especially with the low of 1025, the most you're risking now is $1. I guess it could go to zero, but as far as I'm concerned, you're only risking $1.
All right, I dropped the link to Kenny's room in the chat. That's where it's going right now. Kenny, always a pleasure, sir.
Nice. Thank you, Kenny.
All right, good luck, guys.
I like these IPO plays. I'm telling you. I really like these a lot.
Yep. Yeah. If you are the kind of trader that is looking at like the biggest movers of the day, the biggest overnight gaps up and down, Kenny is your guy for that, no doubt.
He's got these on the radar way better than even me. And I'm watching these every day. Great call.
All right, shall I bring on Mr. Ari Wald?
Oh, yes. That's fantastic. Yeah. Please.
All right.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Oh, Mr. Ari Wald. How nice of you to join us. What's up, my man?
Dude? Good to see you. Thanks for having me back.
Look, I got a Fair Lead Strategies mug here. Shout out Katie Stockton.
Rapping Katie. Nice.
She gives the best swag. It's like a Yeti. Look at that. Shout out Katie.
Yeah,
you don't have this kind of swag.
Start handing out Stanleys, though, I thought.
Dude, she's got some serious AUM in her fund now. Good for her.
Love to see it. You love to see it. Shout out Katie.
Good thing she's spending it all on swag for me. Mr. Wald.
I need an ETF.
What are we thinking about the high beta stocks? Just not being able to keep up with those low volatility stocks. Does that mean anything to you?
Fits and starts. Every time I'm thinking we're going to get this beta breakout, JC, they get sucked back in. And they just can't accelerate. I wouldn't say they can't keep pace with low volatility. In fact, if the alternative is low volatility defensives, I would take almost most other market factors, which is why we still side positively on the market here. I think a lot of the underlying market trends still point offense over defense. And any strength that we've seen in low vol more recently has been counter trend. I don't think there's been any significant reversals into the defensive trade. So while high beta hasn't broken out yet versus low vol, I'm still thinking it's just a matter of time, that the support levels are still intact. And while that ratio has been consolidating, I would favor the move towards high beta.
When we talk about small caps, Ari, the Russell 2000, the small cap 600, S&P small cap 600, making new 30-month highs, small cap growth in the Russell 2000, small cap value in the Russell 2000 getting going. When you go sector by sector, I'm seeing small cap consumer discretionary breaking out to new multi-year highs.
Okay.
Right, second best performer of all the small cap indexes after industrials.
Okay, industrials.
Right, industrials up like 70-something% this bull market. Discretionary up like 55%. Small cap discretionary this bull market. It's got to be a positive for the overall market if you're seeing small cap discretionary making new multi-year highs despite The large cap discretionary, both cap weighted and equally weighted, still below those prior cycle highs. The small cap discretionary got to be somewhat encouraging there.
I think so. Small caps as a whole. You could probably throw small cap financials on that list as well. Finally getting to the action. The small cap value subset completing its base, breaking out to the upside. And here's an interesting stat for you, thinking about Russell 2000 as a whole, JC. If you think about the 3-year rate of change for that small cap gauge, how the performance over the prior 3 years, that index is coming off the poorest performing 3-year stretch. The only poor performing 3-year stretch is going back to 1980. Here are the 4 times: 1990, 2003, 2009, 2020. Major low points in the market.
I was going to say pretty good times to be buying stocks if my memory serves me.
That is right. And now I think price is confirming that, these breakouts that we're seeing. And this has been one of our theses, that it's the internals that are finally just starting to break out, and I think could provide a driver for the next leg of the bull, and why we think the market can continue to surprise higher. So yeah, I look at small caps to us, it's a proxy for market breadth. As they do better, market breadth is going to broaden. And I think for all these reasons, you have rallies with more stocks participating are the rallies that continue. And so when you have it in small caps, and to your point, the right areas of small caps, consumer, industrials, financials, technology as well, small cap
materials acting pretty well also.
Really across the board. Again, the broadness of it. Small cap growth breaking out, small cap value breaking out.
At the same time.
Broad-based.
How about this? In the month of July, we saw the most amount of stocks on the New York Stock Exchange above their 200-day moving average this entire bull market. You had the most amount of stocks making new 52-week highs on the New York Stock Exchange this entire bull market. The NASDAQ, too, as a matter of fact. Historically, do bull markets end with new highs on the new highs lists? Or do you historically see further, at least some deterioration before the indexes ultimately succumb to selling?
You lead the witness. You know the answer to this, JC. You know the answer to this.
You're like Michael. I'm just throwing you alley-oops, baby. You know what I'm saying?
This is
just John Stockton.
We don't compare notes here, and our checklists are pretty much the same, right? Over 300 net new highs, NYSE, 70% of stocks above their 200-day average. Weekly RSI coming off a 77 level. And first, all I get, that's market's overbought. No.
Hold on. What RSI 77 in what?
Coming off the 77 level.
In what?
S&P 500's weekly RSI.
Got it.
While it gets viewed as being overbought, I like to remind everyone that is a measurement of the speed of price. It is simply indicating that prices has accelerated. And what we found is that only 4% of major market highs have developed with an RSI above 75.
So you're saying there's a chance?
It would argue against it. There's always a chance, But when you have that, and when you have the breadth readings that you've mentioned, and the view is that typically breadth will narrow into a major top, you're going to see fewer net new highs, a bearish divergence. All that argues that July was not a market top. We get it. Bull markets don't go in a straight line. It's, do we want to be looking to buy pullbacks? And we think you do want to. I think all the stats that we argued for say you want to buy pullbacks, that the trend is likely to continue rather than reverse. It's pretty strong action into that July peak.
Let me ask you something, Sensei. This advanced decline line on the New York Stock Exchange making new all-time highs. Do we care about the advanced decline line? Care a little bit? Care a lot? What do you think?
Yeah. I have data going back on the NYSE to the 1950s, and it's led a majority of major market tops, typically by a number of months. I think the average divergence is 5 to 6 months or so. When it hasn't been a great leading indicator, we found that the declines haven't been as significant. So if there is, so it doesn't have to, it's not a holy grail bearish divergence. Not every top has to have a divergence, But if you're expecting a major decline, often there's going to be a pretty big divergence in the AD line. And we haven't had that. So again, speaking to the broadness of the market that we're seeing, this is what we've been wanting to see. And I think the confusion here lies is that it's coming in this second year of a bull market. And he's a technician on CNBC. He doesn't call himself a technician, but he loves the technicals. Michael Santoli. He's presented it at the CMT Association before. He keeps an eye on the charts. He does a great job of merging the fundamentals.
Former baseball player, so we can trust him. He's
been asking all of his guests, is this odd to see this in the second year of the bull? Where's the why has this been such a confusing bull? And I think the reason for us is that it has developed very differently with how you'll typically see monetary policy develop through a bull market cycle. Typically, it'll be easier policy at the start of a advance, and then as they start to tighten is when you'll start to see get closer to your market top conditions. It's almost been the exact opposite around. It was a bull market that developed with tighter monetary policy. Now, as they're starting to loosen, we're seeing some better participation readings. And we've seen this before. The sample size is much smaller, but if you look at the few sample sizes of bull markets that developed against tighter monetary policy, I continue to go back to the 87 to 1990 bull market. It was by the time the Fed paused in the second year of the bull, that's when you got the small cap breakout. But be careful, what you wish for. That did kind of mark the start to the end, that by the time they actually started to cut rates, it wasn't an imminent sell signal. Small caps went on to make a new high several months later, but then they topped large caps a few months after that. So you do have the setup here where as you get into the third year of the bull market, as you get into post-election year 2025, I'm going to be looking out for a market top scenario in over the next 12 months. I don't think we're there yet, I think is the argument that we are making.
Ari, I was promised a recession because of an inverted yield curve. I know that I promised there'd be no math involved, but my suspicion is that this said yield curve has been inverted longer than most yield curve inversions throughout history. When recession, bro?
JC, can you imagine that? Can you imagine being so bearish on this inversion in the yield curve that the point that it inverts occurs almost coincidentally with the bottom in the market?
Oh,
that you've had now almost 60% rise in the S&P 500 since the curve has been inverted. I mean, if that doesn't suggest that, again, we care about the market. If I'm getting paid on the market, I'm going to listen to the market. If I get paid on the yield curve, then we're going to put a little bit more emphasis on the yield curve. We don't get paid on the yield curve. Now, when we have found, again, to that point, to my point with monetary policy, right? The poor bucket to be in is actually when you have an inversion in the yield curve, and the last policy move was a cut. So again, that's going to be have me on the lookout here. We haven't had that scenario just yet, but if we are talking about a Fed cut over the coming months, albeit I would assume it would be more of an anticipatory cut rather than a reactionary one like we saw at the inversions in 2007 and 2001, it is going to put me on the lookout for that market top scenario over a longer term big picture basis. But again, we've had this entire bull market develop against an inversion in that curve.
Is it an uninversion or a disinversion? A reversion?
It's the reasons why it's inverted.
No. But what happens when it goes back above zero? What is it? What is it called?
Oh, a steepening.
Yeah. Uninverted?
Yeah, moving back. Yeah, uninverted there.
Not English majors here. I always found it a little bit strange that you're going to sell stocks because the yield of one group of bonds is higher than the yield of another group of bonds. Like, that just seems a little silly, doesn't it? Just kind of like thinking about it broadly.
Yeah, I mean, it's the reasons, right? For us, the reason the Fed purposely inverted it in the first place in 2022, and that was to make sure that they remove the risk of runaway inflation, which was the real threat of pressuring the market and leading to this long and deep decline. To us, it was market volatility created by Fed tightening, and for those reasons is market volatility that should be bought, which was our case at the time there, that they wanted to avoid a replay of the 1970s there. So we welcomed that tighter monetary policy and the inversion in the yield curve that came with it. Right, it's kind of the reasons why it's inverted. I think is a key point to look at too.
I want to ask you about some of the work that you've done, if you've done the work on the lagging industry groups, not so much the sectors, right? So I want to get there, but let's start with the sectors first, and then work our way to the industry groups. You've done the work, we've done the work. When you see the worst sectors, right, down 20%, that usually comes near tops. When you see the worst performing S&P sectors up 15% year over year, it's a little frothy, right? Doesn't necessarily mean the market's going to crash, but that's as good as it gets. I want to get into some of the industry group implications, but can we just stick with this for right now? Can you walk us through, the culprits, as you call them, the worst sectors, and how their performance and what their performance means to you?
Definitely. That does our sector culprit indicator comes into play there. It's the rolling 12-month return of the poorest performing S&P sector at any point in time. And what we found is that we created the indicator to show that not only does market breadth narrow into a top, but it's typically concentrated weakness as well, that there's usually one sector already down 20% on a year-over-year basis ahead of below average market returns. So that's kind of your confirmation of a imminent decline. But then what we also found, and if you were to kind of plot that indicator around the S&P 500, it really does a good job of showing how market breadth does cycle around the equity market. And what we've been kind of looking for is what is peak breadth? And we found that peak breadth is when you can blindly throw a dart, make absolutely the worst sector bet possible, put all your chips into what becomes the poorest performing S&P sector.
And this is market cap weighted sector indexes?
Just thinking in terms of cap weighted, GICS level 1 S&P sectors. Yeah. And that sector will still be up about 15% over year basis. That's peak breadth. Of course, peak market comes several months to even quarters after that. Breadth is going to lead the market. And as it stands, we've seen directional improvement in that indicator, and we have not reached peak breadth just yet. I think
the worst performing sector over the last 12 months is consumer staples, and it is up
4%, somewhere around there.
A little more than that. It's up six and change.
So moving direction, yeah. So we've seen this directional improvement, haven't reached peak breadth, and I think a lot of the breadth indicators show a lot of the same look. All along, while we haven't had this broad-based breakout, we've continued to just kind of key on the directional improvement. It's been directional improvement, and we haven't had that. What we're arguing for is that we haven't seen peak breadth just yet. And again, that should be, positive for the market. Let's get to that point first, and then you'll start to see the pillars of strength crumble. And then through the process of months to quarters, your top begins to form.
So let's review. So when the worst performing S&P sector on a market capitalization weighted basis over the last 12 months, the worst performing sector is up 15%. That's as good as it gets from a market breadth. Right now, that number is 6%. So nowhere near that.
That's right. Utilities going into 2021 was as good as it gets moment then.
Got it. And then from a sector drawdown perspective, those culprits tend to be down 20% before the S&P's peak, or around that.
Now you're looking, then the confirmation on the down. Yeah, through the top, then there'll be one sector already down 20%. Think of financials going into 08. Several examples of that. More recently, it's been more kind of a confirmed. More confirmation rather than a leading signal, but nonetheless, if you were to back test that going back to 1990, generally speaking, readings below negative 20% have been followed by poor returns, significantly below average returns for the S&P 500.
Regardless of which sector.
Regardless of one sector. Yeah, I don't think there's any efficacy if it means more if it's one or another, but it's.
Well, I appreciate
it's
that.
The culprit changes, right? If it's a credit issue, it was financials in 07, right?
Tech, et cetera. Yeah.
Yeah.
So I want to start with that to kind of review how we look at things on a sector basis. My question was, have you done the work at the industry group level? Because we're doing that now as we speak. I haven't heard back from the team. We actually have a meeting tomorrow about it. Curious if you've done it. I mean, there's a lot of industry groups, so I'm curious if you've done seen similar data there or anything helpful.
The thresholds are going to surely change at the industry level. You're going to have more beta to work with there. We haven't created that based on industries, but we just have it for the sector level. But I'm sure you could probably find something.
Well, we'll do it for you, and then you can have Oppenheimer pay me. All right.
There you go. We share, right, JC? We share a little common.
Listen, I mean, listen, that's it, man. Ari, you and I are very fortunate to have a lot of smart friends that do a lot of work. Contemporaries and predecessors, those who did all this work and studies beforehand. You go back to the 1960s when Merrill Lynch was putting together their odd lot, theory and that data with the odd lots was fantastic. And that went away. Do you use the odd lot data at all out of curiosity?
Earlier in my career, it got used. And then as I was kind of creating my own system, I kind of flushed that out. I just didn't find the same use.
And now on the blockchain, it's back, Ari Wald. The odd lot data is back on the old blockchain. We have it. We see it. The folks over at Mother Merrill back in the 1960s would be so proud of us. We're bringing it back. We're bringing it back because we have the data, right? So after the decimalization of equities, that odd lot data kind of just fizzled away. It's funny you mentioned early in your career. Early in my career, we used to look at it too, right? And that just went away. Nobody looks at it or talks about it anymore because it's not helpful. But on the old blockchain, it definitely is, because you don't necessarily need to look for odd lot transactions. We actually have the data of what's in those people's wallets. So we don't have to assume that odd lots mean that there are smaller participants. We know there are smaller participants because we have the data on the size of their wallets. So we know what larger and smaller wallets are doing. So, I mean, it's essentially the same as the odd lot.
I love that. Love that.
Blockchain. How much work are you doing? I know you are equities focused, not so much a yield curve focused person. Now you got the Ethereum ETF, you got the Bitcoin ETFs. Like, how do you think about it as part of a larger portfolio? How do you talk to customers about it? How do customers ask you about it?
About crypto?
Yeah.
Well, I always, I get asked about it. And I think why I don't have a take on it is, well, it's about understanding the beta to it. And I think a lot of my work is about trend following. And, oftentimes some of the moving averages, the longer term moving averages that we're going to key on for, just using Bitcoin as an example, could be equate to a 20, 30, 40% drawdown from where the currency is currently trading. So oftentimes that could be difficult. And I like to remind people that understand that to achieve those, let's say that this is going to be a double, all these cryptos, whatever one it might be, double, triple, quadruple from here, you're going to get these outsized returns over the long term. You got to be able to withstand the near-term volatility that comes with it. When the NASDAQ is down 3% in a day, I'm feeling that, let alone if something is going to be down 5-6%. For
overnight on no news, just another day.
Yeah, that's just beta that I know personally. I'd have a little bit more trouble sleeping at night, but regardless, I could, obviously we could run the same trend analysis on those cryptos. So I will provide a view, but with that, little caveat in mind there that, the support levels I might be naming could be a significant drawdown from where it's currently trading.
God damn it, Ari, when moon?
What is that? I'm sorry.
It's how the kids talk these days. When they say when moon, they're asking when the asset in question is going to break out.
Man,
Moon.
and you got younger kids than I do, JC. There,
They're not trading yet. They're not trading yet. Although my
You're-
daughter asked me to pull up charts. She's like,
You're-
"Oh, Daddy, can I see Disney, McDonald's?" Like we've gone through these.
you're hip to
Starbucks.
the lingo. It's you obviously deal with these cryptos often there. I get
look for
asked
the
what's
beta.
AT&T.
You avoid the beta. I look for the beta.
Yeah,
You know,
yeah.
plus it's really fascinating, Ari, because all of this breadth analysis that we're doing, talking about the new highs list, you know, momentum readings, we're doing the same thing. We take the top 100 cryptos. We're doing analysis on the percentage of those cryptos that are making new 30-day highs, new 90-day highs. Because remember, it's not 21-day highs or 63-day highs because they trade 24/7. So now we're back to 30-day highs, 90-day highs, you know, right? We're doing the same breadth analysis, but you're getting a lot more transparency than you are in TradFi, which is traditional finance, right?
Mhm.
A lot more transparency where you can see the size of the wallets that are transacting. You can see, instead of, you know, a hedge fund filing a 13D within 48 hours or a Form 4 for the insiders, and they, you know, depending on how much they buy, they have 2 weeks or 2 days or whatever it is. You're seeing it in real time on the blockchain. So you could see what these wallets are doing, what they're transacting, what they're buying, what they're selling. You don't have to wait for a 13F that's going to be 45 days old, right? You're seeing it in real time. You might not know that that is Stephen Cohen's wallet. You don't care whose wallet it is. You just know that it's a big one and they're right a lot, right?
I dig. Yeah, I've been looking at cryptos as much. I happened to look at Bitcoin before I came on because I got to look at everything before doing these presentations with you. What we've been focusing on is, we discussed a lot about the market readings in July, and now look at where we've been since then. So from this broad-based condition in the market, now we've have some volatility. What we call a VIX, a buyable VIX spike.
Yeah.
What we like to do with the VIX, we normalize it against kind of where it's traded over the prior 3 months. And so for us, a spike is 50% above its 3-month low. So, and what's interesting, it was from this very low level as well. I think with the VIX, it's this asymmetric trade-off here where you can, ideally you want to buy stocks when the VIX spikes, but it's tough to sell stocks just because the VIX is low from that contrarian basis. Why? Because the VIX can stay low in a bull market. It's a function of a bull market. But what we found, the good opportunities is when you get these spikes from a low level, and that's what was achieved in recent weeks. We had this spike in the VIX. We had a reset in the S&P's daily RSI to its lowest level in 3 months. So now you have the setup from broad-based conditions. Now tactical conditions are becoming attractive. And so you have a nice setup here. I think going into August, which has historically been actually a strong month of the year for the S&P in an election year. As much as
let's stop you right there. Let's stop you right there because I keep being told that it's seasonal weakness, JC. The market's going to crash any day now. This is unsustainable. Here is Ari Wald, chief market technician at Oppenheimer, friend of the show, telling everybody that August, election years, is actually a positive month.
Right. So slicing it and dicing it by the election year, August has been the best performing month of the year in an election year. And so what's interesting, thinking about this August, September, October period in totality, on the whole, it's the 3 worst performing months of the year, the poorest 3-month stretch of the year. But what we found, it's never all 3. It's always 2 of the 3. It's either the weaknesses in August and September and October strong, or vice versa. It's September, October, and October is the weakness.
And this is broadly speaking, not just election years, correct?
Broadly speaking, right, exactly. But if you were to just kind of average them all out, it would look like all 3 are weak. But this is kind of, when your head's in the toaster and your feet's in the freezer, on average, you feel okay there. But important to.
What about the years with the incumbent president running for re-election? That's historically a good thing. That's not the case now, right? Because Reagan and Bernie stepped down, or is it still incumbent because it's the same party?
Right. No, I was thinking about that. If that changes the election roadmap. Yeah.
These are the things we think about, you
Yeah,
see?
right. I got to redo all my seasonal scales because we do break it down like that because there is a bit of a difference an election year with an incumbent versus when there isn't there. Regardless, I guess. So we'll. Yeah, and even even if Trump wins, you got to kind of go right into that second term presidency as well.
It's
So
very confusing, this data, right? It's making it very hard on us for us seasonality folks.
Well, for all these reasons, important to remember, seasonals are secondary confirmation. One should never trade off seasonals alone. Can you imagine the guy that went out and sold every April 30th and bought back every October 31st? No one's going to do it. If you have done that without question over the last 70, 80 years, you've done terrific, but you're not going to do that. You're going to, you always set out a roadmap. And I always think about how these cycles typically develop, but you need price to confirm that roadmap. So again, it's, you lay out some possibilities, but again, you want price to be able to confirm that. And you want to see.
The fun police is here. Ari, quickly, I wanted to just mention what Ari just said about seasonality. You don't want to use seasonality on its own. You want price to confirm. You want to follow price. We are very good friends with Jeff Hirsch, who is literally the author of the Stock Traders Almanac, right? Which is the seasonality guy. And he will tell you exactly what Ari just said. And he actually puts that into practice and uses MACD crossovers to confirm and things of that nature. So even like the guy in the seasonality world will tell you the exact same thing Ari said. Last question, Ari, you're looking pretty jacked, bro. What are you benching these days?
I'm just going easy there. I'll go up to 225 and stop there.
225. How many times you putting up 225?
I could probably put that up 5 times.
All right.
Yeah.
All right.
Yeah.
I would have taken the over. You look good, Ari.
I could probably, I'm usually, it's not my first set there. I'm not usually looking to max there or anything, but thank you, JC. Yeah, hey, as we get older, strength training increasingly important. I got to keep up with these kids there. So
no doubt. I'll see you on the old block and chain, buddy.
Take care, guys. Thank you.
That's all right.
Peace.
How awesome is Ari Wald? Come on.
It's a treat. It's definitely a treat. You have a good network.
Yeah, always has been the man. And you know, he talks to a lot of institutions. Obviously, he's the chief market technician at Oppenheimer. It's his job.
Right.
So I think he brings like a pretty unique perspective on things. You know, also, as you could tell, in case you hadn't noticed, him and I were trained literally the exact same way. Have very similar mentors. Our work is very similar, yet different, right? But you could see that it stems from a similar place, right, Strazza?
He does look great. I'm glad you said that. I was thinking the same thing. I was sitting here thinking, wow, just look at Ari right now.
Yeah. Nobody says that about you.
No, I have my moment.
Or Spencer. We got to step up our game, guys. We got to step up our game. I can do 225 3 times. That's pretty good. I can't do 5. I want to get it up to 10. Dude, if you could put up 2 plates on each side and just boom, 10, 15 reps, that's pretty strong, dude.
Yeah, it's a good way to hurt yourself. Do push-ups.
Dude, stop it.
I'm getting there, JC. I'm getting there. All right.
Yeah, I was talking to Spencer the other day. He's like, "Oh, I'm on my way back from the gym." I'm like, "Okay."
Not me. Look at Kenny. All he does is push-ups. Look at that guy. Okay,
and he looks pretty good. Kenny does not look his age.
He's a great example.
70. Kenny's old.
He's a great example of the fact that you don't need to go to the gym. This stuff is easy. You could do it on a yoga mat, in your living room. Go to the gym.
Kenny also plays pickleball. Maybe he is old.
I don't know what that means.
All right, Steve. Yeah. Which of the many earnings reports you want to talk about? We have so many more in the doc and in the deck for that matter. So I
want to talk about the Pfizer.
The what?
Pfizer.
Oh, Pfizer. I don't know what you're saying.
Mm-hmm.
All right. Yeah, I mean it's flat. It's flat today. There's the chart. It was actually a good report though. I guess it was their best report since they had the COVID vaccine stuff going on. So it was a beat on the top line, a beat on the bottom line. They raised their guidance, which again, I think it's their first time with the guidance raise in several years at this point.
It is.
But again, the stock is flat today, so take that for what it's worth.
This
Damn,
company,
you know what a bummer?
Yeah.
I didn't ask Ari about the cash levels, man.
Okay. Cash levels of what?
Just just how much it would suck to be sitting in cash, you know?
All right. Listen.
It's a
Pfizer,
lot of money. That's all. So it's a lot of trillions. So I wanted to hear his thoughts. That's a bummer. All right. Just remind me next time he's on.
Pfizer is holding this level. When you zoom in on the chart and look at a daily, it's a beautiful primary trend reversal that's shaping up. Maybe needs a little bit more time, right? The 200-day is still flattening, curling higher, but it's getting there. It pays a 5.5% dividend. This is Pfizer. Like they blew it with the pandemic, okay? And that's why the chart has been terrible for several years now. But all that is behind them now. And now this is a turnaround story. So I know you can get 5% in bank accounts these days, but you get 5.5% from Pfizer as it climbs up the right-hand side of this base and returns you maybe a double at the same time. I love setups like these. So very interested in the Pfizer. I think this is a great opportunity.
All right.
Merck missed.
Scoop and score.
Yeah, Merck missed, right? Do Merck. Merck looking like a top right now, probably not a top. Look at that momentum regime. Merck is, healthcare is getting more and more interesting, isn't it, JC? These stocks are looking better and better.
I've been telling you. You tell me that healthcare's too boring. Oh, it's a bull market, JC. Healthcare's boring. Now he's interested.
Another report I was watching.
What got you interested in 48 hours? Why the change of heart?
No, I've been looking more around healthcare. First of all, I've been in Pfizer. I've been talking about Pfizer. I've been building that position. That's been going on. And I'm mostly in the biotechs, but I'm looking at charts like Merck and Bristol Myers right now. And they do have my attention. That's probably not.
You look at me like I'm some kind of like crazy boomer when I'm talking about these healthcare stocks and United Health making new all-time highs. Healthcare, third largest component of the Dow, third largest component of the S&P. United Healthcare, largest component of the world's most important stock market index. It's a big deal.
I have a bias against the health plan providers. All right. I'm just going to have to come out and say that. I don't like these businesses. I hate these companies. I think it's dirty. It's a tragedy how fraudulent these businesses are. Okay. Every other year, there's another thing going on. I hate these companies. I'm so uninterested in health plan providers.
Hate.
Yeah.
I agree with that, Steve, but I also own these stocks. So
I know. So you're a better man than I am, Spencer. I can't do it.
Yeah.
We have other earnings.
I hate cruise lines. I think you got to be some kind of like weird person to go on a cruise instead of just picking a fucking place and going there and instead, right?
Most
like
of those,
I just find it
not for everyone.
Strange. But if the cruise line's going up, I'm gonna buy it.
Yeah, I could make a never list of industry groups. It would be short. The airlines.
One of my boys yesterday, he's like, "Yeah, I'm going to the Bahamas." I'm like, "Sweet, where are you going?" He's like, "Oh, I'm going on a cruise." I'm like, "Are you serious, dude? Like, really?"
I might go to the Bahamas. My buddy's boat.
Go to the Bahamas.
Right?
But don't get on a giant boat with a bunch of people. It's like getting everybody in Times Square and then sticking them on a boat and then hanging out with them for a week. Like that must be terrible.
Depends on the cruise and where you're going, for sure.
One of my friends just did one of those Alaskan cruises. Said it was lovely. Pictures looked incredible.
From what I've heard, it's a whole different
vibe.
To
Alaska?
I don't know. What would you do when you got there? Isn't that the nice thing about a cruise?
You want to go to Anchorage in the summer. You go to baseball game, right? After the Cape Cod League, the Anchorage League is like the second best in the country. It gets all the West Coast kids. So Anchorage baseball, for sure. Go see a glacier. Take a helicopter, land on the damn glacier. That's cool. Yeah. Do a little fishing, right? Little fishing.
You've been to Alaska?
Oh yeah.
You did like ice fishing and all that?
I didn't do the ice fishing because it's the summer.
Yeah.
So it's more of like a traditional fishing.
Did you sleep in an igloo?
I did not sleep in an igloo because again, it was the summer.
Missed opportunity there.
It doesn't work that way. You see, they have summers there.
Listen, I got a lot of new stuff to cover. All right. So tell me about your vacations later. CrowdStrike, when it rains, it pours. They're just pouring it on these guys. So one of these, I guess, marketing companies came out. it's a study, right? Estimating like $5.5 billion of losses, I think I saw.
Delta is preparing to sue
across S&P 500 companies. So that's why we as technicians, right, we said we don't want to catch a falling knife, because you don't know where it ends, right? So this one's not quite over yet, making another new low today. You got to find some evidence of a tradable bottom. But I do think it happens, and CrowdStrike probably bounces back and is fine from this. But right now, it's really a no touch, right? Priced every day, every morning. There's more price targets being lowered, more downgrades. So,
well, yeah. I mean, look, you had like what? How many days in a row where it was kind of flat? 3 days in a row, and then more headlines. So it's stocks in the headline, whirlwind are risky bets.
Did you see the headlines about the GBTC outflows?
Oh no, I didn't actually.
That's getting hit hard today. 11.
There's been outflows.
Well, I think people are getting a little bit nervous now, and outflows can act in the same way as bank runs. Sometimes, I think that's what you're seeing here today. Right, it's not trading with Bitcoin today. If you look at GBTC, that's why we say BlackRock is here now. It's really your only option, unless you want to trade the FBIT because you have a Fidelity account and it's probably lower fees, or maybe they rebate you. I don't know how that works. Sure, right, but you can't mess around with the grayscale anymore. We have better investing vehicles now for this. That would stink. Imagine if you're in this one and not IBIT. You're down 10% today. So. Risk that we don't need to take. Sprouts Farmers Market.
This is kind of the big one of the morning here.
Do we have the base chart? I want the big base chart.
We're up 21%.
So this one has looked so good for so long.
Long.
Have you guys seen this one in the wild? Like I don't. It's a grocery store. It's like a Whole Foods.
It's like Whole Foods. I've never seen one.
Yeah, I've
never seen one in the wild either. Where are they? Are they in California? It smells like a California place.
I think Sean dabbles. I think they have them in Colorado. But the base looked great. I don't know if we have the chart or not. Just smashed earnings. Hit the ball right out of the park. This one's trading above 100 right now today. Well above 100, right?
Yeah. Oh yeah.
So that's good. I dropped in some other earnings names I want to cover. Did we get to them all?
Can we talk about how the market is it's like it's like a scam.
Yeah.
And it's manipulated. And why don't we take a look at slide 2? They say the market is rigged. If you truly believe that the market is rigged, shouldn't you bet on those who take the most advantage of the rigging?
Goldman.
If the market is rigged and you're so confident of that, then why are you complaining about it on Twitter instead of just being a shareholder in the company that profits the most from said rigging?
So let's talk about
this. Am I crazy?
So it has been rigged for a long time, and these companies have been the beneficiaries. JC's talking about the big investment banks, the big 6 banks, Goldman Sachs. I was listening to an interview with David Solomon this morning. One thing stood out, right? So a big theme over the past year and a half now, maybe even longer, is that private equity companies are taking the private lending business from the big banks, right? So that's down huge for them. They're making up for it in other ways. Net interest margins finally moving back in the right direction and growing, right? So other things are working, but they're losing business in other revenue lines that have been good historically. He said today, another one seems to be under fire here. M&A activity is running 20% below 10-year averages. From what I'm reading and hearing and seeing, M&A activity is not down. So I think maybe M&A activity is running 20% below 10-year averages for the major banks. They're just not getting that business anymore. So I think there are risks, right? Because we always talk about, the big banks are so diversified. They have all of these revenue streams. We might be in an environment now where you want the ones who aren't that diversified, because they're losing business in those other alternative revenue streams, while the basic lending business of banks, something that you'll be very exposed to through a regional bank, is really what's working in this environment. So that's what I was thinking of this morning when I was listening to the interview with Goldman Sachs CEO. He also made some comments about rate cuts. He's been in the camp that we probably maybe weren't going to get any this year, and he seems to be coming around says he's looking for 2, not 1 tomorrow, but maybe 2 coming up soon. So there were some interesting comments in there from the one DJ Soul.
I don't actually know. I thought he got yelled at for DJing. I don't know if he still DJs.
He doesn't DJ in the Hamptons anymore?
No, I don't know. Anyway, okay, couple more. Let's look at, you guys want to look at like Procter Gamble, which is down 6%, 6.5% this morning. Sales miss, guidance was light for PG.
I think this is the same story as McDonald's, Spencer.
Something about diapers this morning. Just talking about.
No, so the inflationary forces that companies like McDonald's and Procter and Gamble and Kraft Heinz have, put upon us all over the past several years seems to be breaking down a bit. I think we're at a breaking point in that trend. You can only push these things so far, and people are like, well, if a bar of soap is that much, then maybe I don't need soap anymore. And I think that's what's happening with Procter. Yeah, it's the same thing as McDonald's, right? They pushed it too far, these guys. We always come on here and say, hey, one of the greatest hedges against inflation is like consumer staples company. They'll put less chips in the bag, raise the price a couple quarters, whatever. But there's different levers that they could pull in an inflationary environment. It seems like they're running out of those levers, a lot of these companies. No? Hot take?
I mean, they're different sectors, right? Like one is a staple.
But it's the same strategy. They've been raising prices for years now, right? And getting by.
Yeah.
And now the consumer's saying, no more.
Probably true. I mean, look, there's more options than ever, right? So
that's
more people have more choices than ever on everything. Thanks, Amazon. So
yeah. Sure.
Okay, I don't know if we have the chart. Diageo not doing well in.
Okay, Spencer, speaking of too many other options, that's these guys' problems. Nobody goes to a liquor store and buys Captain Morgan's anymore. There's a million different rums from here or there, the Puerto Rican rum.
Captain Morgan's.
Japanese whiskey. No, but think about the competition for these like traditional liquor brands. Even beer. They're drinking like the beer with all the hops and the IPAs, and it's got to come from like some small town. And
I don't know. I like my name brand. I like my name brand beers, but Diageo sales down 1.4% on a year-over-year basis across the board, mostly due to North America and Latin America.
Well, people aren't drinking less, so that sounds like a company-specific issue.
Perhaps.
Remember all the stats that came out around COVID? How many people are drinking so much?
Yeah.
It's a mega trend, I think. So they got to figure something out.
What else was in the doc? I mean, SoFi. SoFi. What am I going to do with you? Hey, I'm a customer. They're up 3%. I don't own the stock, but it seemed like it was a good report. Let's see, a beat. Guidance was good guidance, and looks like good. New members. It all looked mostly good, but it's SoFi, so it's a kind of a piece of shit from a stock standpoint.
You want to bang out a quick hot corner?
Bang out the hot corner. I got a good recess.
So hot right now.
What do we got?
You know who my favorite buyers are, JC. You know what I'm looking at on this one.
President and CEO?
Nope.
Executive Vice President and CFO.
This is the CFO. That's the important part here. Right? Sometimes they have multiple titles.
Strazza has man crushes on CFOs.
1.1 million.
It's not nothing.
That's good. That's there. That's plenty. And I like it when they come in and they buy fundamental weakness or some sort of selling on
shitty earnings. What was the news?
Listen, all the auto manufacturers got hit recently, right? GM probably far less than some of the others.
Ford, that's right. Yep.
I don't know if this CFO is also a technician, but
I was thinking the same thing, dude.
This is where you want it. This is where we want it. So this one will probably be thrown on our screaming hot list. And if we can get a good entry, like we're gonna follow him right into this. I know it's
Dude,
GM,
it's so funny you just said that. I'm thinking the same thing. I was like, CFO, but maybe he's a technician on the side buying that dip, retested the resistance.
Yeah, look, you got it. So why are we saying this? This is a textbook bearish to bullish primary trend reversal pattern, right? You got a quick leg up out of the base, and now like a hard retest coming. This is where you want them. So this one really stood out.
Not to mention the CFO has inside information.
Yeah. So when a CFO comes and throws $1 million in the open market on bad earnings report, he's probably thinking the next earnings report is going to be a pretty good one.
Strazza always says this all the time when he catches these, because he's like, he knows that they threw in the kitchen sink. He knows that all the bad news is already out there, right?
I've never seen another executive or any institutional insider time their trades like the CFOs time them. So we're always watching extra close for something like this. And the chart is there too. So this one checks a lot of boxes for us. We'll be talking about it more in the hot corner soon.
To the point where I always talk about how I love when the CEO buys. Strazza's like, nah. Well, you want to be buying when the CFO buys. And then we agree that it's best to buy when both of them are buying.
The CEO is easily the second best. The CFOs, sometimes they come in and boy, they can make some good moves. Lastly, just to wrap this up, you're going to hear a lot of things on the interweb today about insider selling. I would ignore it.
Yeah.
You're going to hear a lot about the Tesla.
Tell me why. Tell me more.
Million there. Oh, some Form 4S's at the wire. Buffett selling more.
What is a Form 4S? A insider selling?
Yep.
As opposed to a Form 4B?
P. Yep. So Tesla insiders dumping more shares. This is nothing new. They're going to continue to do that forever and always. Warren Buffett, though, selling more Bank of America, that's not something that really happens every day. That one stood out a little bit. You can literally see it on the chart. When someone that big is dumping shares, this happened between, I think, July 25th and July 29th, these sales.
How much did he sell?
Dude, tens of millions now. I put it in the chat. Warren Buffett sold
tens of millions for $1 trillion company. That ain't much.
Dude, hundreds of millions. It sold 767 million of the stock from July 25th to July 29th. You could see it. You could see it in the candles. You could see it in the volume.
All right. 1% of the portfolio.
No, for sure. Right. But Buffett's taking some profits in Bank of America. That's interesting.
That's what I'm saying. So
yeah,
he took 1% of his portfolio and he sold some of that.
That's not insignificant.
Nobody says it's significant or not significant. I'm just doing the math.
Yeah. So we're talking about two different things here, right? The insider sales with the Tesla, that is so to be ignored. It's going to keep happening. The insider sales with Buffett, you don't run and dump your Bank of America. I'm long Bank of America. I'm happy to stay long Bank of America with Warren Buffett selling, right? But you do see it in the chart when he's dumping hundreds of millions of dollars of stock. So it's something to be aware of, right?
I got a good recess, Spencer. Hit it.
Me too. All right.
Go ahead, Spencer.
JC, I was inspired by your son. So I went and I got myself an allergy test yesterday.
Okay.
For the first time since I was 6 years old, I got a scratch test. I've been allergic to nuts my entire life.
Is that why last night I'm on the phone with you? You're like, I gotta go.
That's why I was running late and I had to go. All right. So here are my results, and I'm only saying this because I need advice now. So I'm still very allergic to peanuts and hazelnut and Brazil nut, but the test was inconclusive and or negative for pecans, pistachios, cashews, walnuts, almonds. Now, I have never had any of those. Actually, I had a walnut once and it was really, really bad. But anyway, I've never had any of those nuts or things with them. So my question is, the doctor basically said the only way to know for sure is to try it and to see what happens. So what nut-based product with pistachios, pecans, cashews, walnuts, or almonds should I try?
Baklava.
Pistachios.
Baklava.
Just eat pistachios.
I don't want to eat like a nut. I want to eat something with the nut in it.
Pistachio ice cream.
Baklava. What part of baklava?
Okay, baklava. I've never had baklava in my life.
Pistachio ice cream. Have some pecan
Pistachio
pie.
ice cream ain't bad. Yep.
Listen, only you, Spencer, know the true risk reward that comes with this, though.
Yeah.
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 Is.
So you better get something delicious.
So there was a chance that I'm like mildly allergic, or not at all. But I don't know.
Have your wife stand over you with an EpiPen and then
Hold on. So what is it? Tell me again.
Pistachios, pecans, cashews, walnuts, almonds. Those are the 5 that are like in play.
You just eat a cashew because they're delicious.
Pistachios are the best.
Yeah, like you don't want to make anything with cashews. Like just eat the cashew. The baklava for the pistachios, the walnuts. What do I eat walnuts with? Like banana bread with walnuts in it, I guess.
Sure.
And pecan pie, obvs.
Put them in a salad.
Okay, so baklava, pistachio ice cream, pecan pie. Okay.
Walnuts in your banana bread.
Walnut banana bread. All right, not a huge banana. All right, yeah. Yes, I will definitely be careful with my position.
Have some pesto. Did you say pine nuts?
That's not a nut. I can eat those.
Oh, okay.
Yeah. But Strazza's right. If pine nuts on the with the basil. All right, so I throw up slide 2. I just want to do a quick little book corner here.
Nice.
Hooked on phonics. So I read the Bitcoin Standard. I can't believe it took me this long to read it. I apologize to the entire Bitcoin community. It's unacceptable. I'm sorry. I made up for it. I read it. I've had it for years. I just haven't gotten around to it. And David Cox the other day mentioned it, and I'm like, God damn it, JC, read this book. It was excellent. It had nothing to do with Bitcoin, really, until the end. Spoiler alert. Like, it's all about the history of currencies and monetary. I mean, it was fantastic. Great history lesson. Really cool anecdotes. Highly recommend. The guy's pretty angry. This guy, Saif Dean Amos, he seems a little bitter, this particular person. Whatever. Just know that going in.
He's not bullish TradFi. He's not
Keynes.
Yeah.
Like all Keynesian economics, like is calling him a pedophile. Like he's going on and on and on about Keynes.
Here we go. Yeah.
So there's that. I thought it was very good. Highly recommend. I'm almost done with this one. This is Mike Maples' Pattern Breakers. So it's more of like a startup book. He was an investor in what's the streaming one with the video games?
What now? Ready Player One?
No. What's that streaming where the people watch other people play video games?
Twitch.
So he was an investor in Twitch, but he was an investor in Justin TV that turned into
Yes,
Twitch.
That was the precursor.
He was an investor in whatever Twitter was before they turned into Twitter. And he's seen sort of these pivots in the past. I thought it's a really fascinating book. Maybe not the best book I've ever read. Maybe not the most entertaining book I've ever read, but if you have any sort of entrepreneurial ambitions or have started companies before or did start a company, it's very relatable for sure. So I'm a fan, highly recommend. And then so I gave you one that I already read. I'm giving you one that I'm almost done reading, and then I'm going to give you the one that I'm reading next. And this one was inspired by our friend Ben Carlson, who we should get on the show, by the way, Spencer.
Yeah.
Carlson wrote a great blog post yesterday about he doesn't want to be an old rich guy who complains about taxes.
Yeah.
Right. And he doesn't want to turn into a gray-haired perma bear. Like it was cool. Ben Carlson, excellent blogger. Remember Strazza, I told you on the phone yesterday how Josh Brown, like 15 years ago, wrote a series of how to write a blog post?
Yeah.
Ben Carlson, go to his blogs, like literally to a T, follows all of those rules. Very, very funny. Die with Zero by Bill Perkins, which I hear is really good. Kind of how to, treat yourself with the money that you made, as opposed to, my financial advisor tells me this all the time. He's like, I see all these people with all this money. They never spend any of it. And then they're old and they never did anything with it and they don't get to use it. He's like, take your portfolio, borrow against it, put it in your pool, go on vacation. Like my financial advisor tells me these things, so I'm looking forward to reading this book very much so. So those are a few things that are on my mind.
That sounds good. I mean, you can't take it with you.
Right.
Can't take it with you.
Right.
That's what my grandpa used to always say. Can't take it with you. All right.
No.
Strauss, you got anything?
Nope.
Cool. Start Request Live. 1 o'clock. Twitter Spaces with Pat at 11 o'clock.
There's so much to talk about. Join us on Twitter Spaces today. There's a lot to talk about.
We'll see you there. Thanks, Ari Wald. Thanks, Kenny. Thanks, chat. Go make money. Can't take it with you.
Adios. YOLO responsibly.
I can't take no loss. I don't even know what it